Trump tax cuts. And while she was talking, she said the middle class tax cuts. And so, not exactly clear what that is. One thing I hope to see continue is the qualified business income deduction that was created under Tax Cut and Jobs Act. So that's the thing where if you have a pass-through income from a Schedule C, from an S corporation, from a partnership, you could get up to 20% of a break on that income for tax purposes. So if you have $100,000 worth of profit, maybe you only pay tax on 80 of it. And there's criteria and all this kind of stuff as far as wages and income and all this kind of stuff. That's one of the Trump tax cuts that I hope it gets included. The from standard deduction plus exemptions to just larger standard deduction, that's probably in this cut or this make Trump renew the Trump tax cuts issue. If anybody remembers way back to 2016, you used to file taxes with exemptions based on the number of people in your tax household. So if you were a family of four, you would have an exemption of four, and four times $2,000 was $8,000. And then on top of that, you had a standard deduction. So they got rid of the exemptions and they just made the standard deduction bigger, which for smaller families worked out better. For larger families worked out worse. And so it depends on where you fall on that divide as far as whether that helped you or hurt you. So I anticipate that will also continue under this renewal, assuming all this passes, right? Also, as the renewal, a lot of things were eliminated from individuals. So things like unreimbursed employee expenses. So we have this conversation multiple times a month with clients. Say, I have this job, but I also work from home. Do I get to deduct home office? Are you working as an employee? Yes. Then you get nothing. Okay. So this was one of the changes that was eliminated. Moving expenses used to be deductible federally as long as you moved at least 50 miles and for work purposes. That got stricken. So a bunch of little things like that were removed from the individual side of the tax planning in order to pay for, quote unquote, the other tax cuts that were created through the business deductions and things like that. The other thing with the renewal of the Trump tax cuts is probably going to be bonus depreciation. When the Tax Cut and Jobs Act was originally passed, we got 7 years of 100% bonus depreciation, which was amazing. If you buy an asset, a capital asset that has to be depreciated over several years, normally you take a percentage. So if it's a 5-year asset, you take 20% in year one, 20% in year two, and so on until you use up the expense. And that means you're out the cash, but you're not getting the full benefit from the deduction in when you spend the cash. So bonus depreciation fixes that though. But under 100% bonus depreciation, you bought the asset, if it's a 5-year asset, a 10-year asset, whatever, you still got to write off the whole thing in year one. So the idea here was to incentivize the investment into infrastructure and equipment and all these kinds of things for companies in America. Because if you get the full tax break up front, then time value of money, it's better off taking that now as opposed to later. So that's probably going to be coming back with this renewal. So there's a whole lot of other provisions that were created as part of the Trump tax cuts. Just by saying renewing the middle class, whatever, is not clear. Those are some elements that I expect will be part of this tax bill that I'm talking here.